Well, gold has had a run up. We're also seeing silver follow it, but to give you a little more in-depth look at the white metal is Mike McGlone. Mike, it's great to have you inside the studio with us again today.
Thanks, Joe. Thanks for having me back.
So Mike, let's look at a little bit of the technical movement in silver and why you think that the white metal's headed higher.
Well, silver this year has had the worst correction since 1981. In 1981, to put it in historical context, was the aftermath of when the Hunt brothers tried to capture the market in the 79, 70, and 80 area. So it was a huge correction. Silver this year, just last week, was down 35%. It's rallied a little bit. It's still down 30%. And that's pretty substantial. It's a massive correction. Yes, that's technical, but it's just an indication of how cheap it's become. And it's brought out buyers. Buyers by meaning U.S. mint sales of silver have reached all-time new highs.
When you say it has been cheaper, what do you mean exactly?
By cheap, well, corrections. I mean, relative value. A good example of relative value is markets will always move fundamentally, big picture, long-term supply and demand, but relative value technicals will really matter. And a good example is look at the gold market and the S&P 500. The gold market and S&P 500 have basically been trending together for a while, but this year they really diverged. Gold has dropped, 20% or so, and the S&P 500 is up about 20%. Yet the 200-day moving averages for both have just kind of met around 1540. Gold is about 15% or so below that level, and the S&P 500 is about 10% above that level. So the risk going into September, and once we leave this slow, low volatility August period, is more of a reversion of that type of extension.
Sure. So then what do you see around silver that is truly going to push it higher over the next period?
Well, there's been substantial amount of demand,
Okay.
Mostly demand. I mean, in supply you can't really change too much. That's much more elastic. The inelastic demand is really, the elastic demand has really picked up, and that's from sales, from gold sales, from jewelry, and for demand for investment. And that's one thing that's been a factor too, is you look at ETP holdings of gold, it's dropped total around 10-15%. The ETP holdings of silver across the board have remained about the same for the last few months, even despite this correction. An indication of more demand, more of the inelastic, or the elastic demand, it's investment, coins, and things.
And finally, a slight pivot. We heard that India was going to raise import prices or import tariffs on gold and silver. They raised both of them to 10%. What do you make of the move? Yeah,
well, India has to do things to protect. They have issues with their current account deficit. Their currency has declined over 10% this year. And they're not raising rates for a lack of demand. They're restricting because of an excess of demand. So it's an indication of the amount of demand out there. India has to do what they have to do, but what are they also doing? Also, when people are told they can't buy something, what do? They find a way to buy it. So there's good signs of black market demand, and it's also going to create pent-up demand, and it's creating demand in other countries when, people who want to invest in silver will find a way. And also, there's a cultural affinity. In addition, there's a religious factor that you can't really change 2,000 years of history. If people want to buy precious metals, they'll find a way.
All right. Mike, thanks so much.
Thank you.
That's Mike McGlone. I'm Joe Deaux for TheStreet.